Are you curious about the latest trends and transactions shaping the commercial real estate landscape? Welcome to the Commercial Real Estate Insights podcast. I'm your host, Steve Hamoen. Let's get right to it. In a significant transaction that underscores the dynamic nature of the retail sector, the Willow Creek Retail Center in Auburn has been sold to a Bay Area investor for nearly $28 million. This sale is a testament to the continued interest and investment in retail spaces, despite ongoing challenges in the market. The Willow Creek Retail Center, known for its strategic location and robust tenant mix, attracted attention from various investors. The acquisition by a Bay Area buyer highlights the cross-regional appeal of well-located retail properties. This transaction could signal a trend where investors look beyond their immediate markets to capitalize on opportunities in other regions. Interestingly, this aligns with trends we're observing in Kitchener and Waterloo, Ontario, where retail spaces are also witnessing renewed interest. The Canadian market, much like its American counterpart, is seeing investors diversify their portfolios by acquiring properties in different regions, aiming to balance risk and reward. The sale of the Willow Creek Retail Center is not just a standalone event, but part of a broader narrative in commercial real estate. As we continue to see shifts in tenant leasing and multifamily developments, these transactions provide insights into investor sentiment and market dynamics. Whether it is in Canada or the United States, the underlying factors driving these deals remain remarkably consistent. The city of Sugar Land, Texas, has recently greenlit a $12.5 million investment aimed at rejuvenating its downtown mixed-use development, Sugar Land Town Square. This project is significant as it involves a comprehensive renovation and modernization effort for the city's 1.4 million square foot mixed-use space, which integrates office, retail, and restaurant components. The funding, approved by the Sugar Land Development Corporation and the Sugar Land 4B Corporation, will focus on enhancing various aspects of the development. Key upgrades include improvements to communal office spaces, amenity areas, landscaping, and streetscaping. Additionally, the project will revamp entryways, lobbies, and signage, while updating garden areas with new furniture, fixtures, and equipment. Sugar Land Town Square, which initially opened in 2003, spans 32.8 acres and is currently 73% leased. The renovations are part of a broader repositioning strategy announced by the project's operator and manager, Reevaluation, in September of last year. This initiative aims to boost the appeal and functionality of the development, attracting more tenants and visitors alike. The move by Sugar Land reflects a broader trend in mixed-use developments, where cities and developers are investing in modernization to keep pace with evolving market demands. This trend is mirrored in Canadian cities like Kitchener and Waterloo, where similar projects are underway to enhance urban landscapes and drive economic growth. By investing in modern infrastructure and amenities, these developments aim to foster vibrant, sustainable communities. In a notable development in the heart of Austin, Texas, El Paso-based Hunt Companies has secured the necessary zoning to construct 3 high-rises near downtown, specifically across the river. This ambitious project is set to significantly alter the city's skyline and represents a key milestone in Austin's urban development. The approval of this zoning change opens the door for substantial growth and transformation in the area, aligning with broader trends of urban densification and redevelopment. As cities continue to grapple with population growth and housing demands, initiatives like this are vital in addressing those challenges. The Austin Business Journal reports that this project, due to its scale and location, is expected to attract considerable attention from both local and national stakeholders. The development's impact on the local economy, job creation, and the housing market could be profound, offering new opportunities and challenges for the city's real estate landscape. This project in Austin mirrors similar urban development efforts observed in Canadian cities such as Kitchener and Waterloo, Ontario. As these cities also experience growth, there is a parallel emphasis on leveraging strategic zoning and development to accommodate expanding populations while enhancing urban livability and economic vitality. The San Antonio commercial real estate market is currently facing a series of challenges and shifts that are expected to shape the landscape in the coming years. According to top brokers in the area, one of the primary issues is the rising cost of construction, which has impacted the development of new multifamily properties. This has led to a decrease in the number of projects being initiated, as developers are cautious about the financial viability of new builds in the current economic climate. Additionally, tenant leasing in San Antonio is experiencing a transformation. The demand for flexible leasing terms has increased, with businesses seeking shorter leases and more adaptable space configurations. This trend is driven by the uncertainty in the market and the desire for companies to remain agile in their operations. This mirrors trends observed in the Kitchener-Waterloo region, where businesses are also looking for more flexible leasing options to adapt to changing business environments. In the industrial sector, San Antonio is witnessing a surge in demand for logistics and warehouse spaces. This is largely attributed to the growth of e-commerce and the need for efficient distribution channels. The demand for industrial spaces is not unique to San Antonio. Similar patterns are being seen in London, Ontario, where the rise of online retail has spurred the development of industrial properties to meet distribution needs. Office spaces in San Antonio are undergoing a period of reevaluation as businesses reassess their space requirements in light of remote work trends. There is a growing focus on creating collaborative environments that can accommodate hybrid work models. This is a challenge also faced by offices in Cambridge, Ontario, where companies are redesigning spaces to support both in-person and remote workforces. Retail spaces in San Antonio are adapting to new consumer behaviors. With the increase in online shopping, physical retail locations are being repurposed to offer experiential services that cannot be replicated online. This shift towards experiential retail is also being seen in Kitchener-Waterloo, where retailers are focusing on creating unique in-store experiences to attract customers. Overall, the commercial real estate landscape in San Antonio is navigating through a period of transformation, much like various regions in Ontario. The challenges and shifts in tenant leasing, industrial demand, office space utilization, and retail adaptation highlight the interconnected nature of the real estate markets across borders and the importance of staying informed on both local and international trends. In a notable transaction within the commercial real estate sector, the Pine Creek Business Park, located at 3360 Coffee Lane in Santa Rosa, has changed ownership for the first time in 3 decades. This industrial flex business park, nestled in the heart of wine country, has caught the attention of new investors, marking a significant milestone in the region's real estate landscape. The Pine Creek Business Park comprises 6 buildings and has been a staple in the Santa Rosa business community, providing versatile spaces that accommodate a range of industrial and commercial activities. The sale of this property underscores the enduring value and appeal of industrial flex spaces, particularly as businesses continue to seek adaptable environments to suit their evolving needs. This acquisition aligns with broader trends observed in both American and Canadian markets, where industrial properties are increasingly coveted due to the rise of e-commerce and the demand for efficient distribution centers. In the Ontario region, similar dynamics are at play, with cities like London and Kitchener-Waterloo experiencing a surge in industrial development to meet logistical demands. The sale of Pine Creek Business Park not only highlights the robust interest in industrial properties, but also serves as a reminder of the interconnected nature of real estate markets. As businesses continue to adapt to new market realities, the ability to provide flexible, strategically located spaces remains a key driver for investment and growth in both Canada and the United States. Thank you for listening to the Commercial Real Estate Insights podcast. I'm your host, Steve Hamoen. See you on the next one,